On the CMA exam, you will be tested on your understanding of financial statements. 15% of the questions will be on financial accounting. For the balance sheet, income statement, statement of changes in equity, and the statement of cash flows, the candidate should be able to A. Identify the users of these financial statements and their needs. Users: investors, creditors, management, regulatory authorities, analysts, and internal stakeholders. Needs: investors seek information for investment decisions. Creditors want to assess creditworthiness. Management uses it for internal planning. Regulators require it for compliance. Analysts use it for recommendations, and internal stakeholders monitor performance. B. Demonstrate an understanding of the purposes and uses of each statement. Balance sheet shows a company's financial position at a specific point in time. Income statement reflects a company's profitability over a period. Statement of changes in equity illustrates changes in equity during a period. Statement of cash flows reveals cash inflows and outflows during a period. C. Identify the major components and classifications of each statement. Balance sheet: assets, liabilities, equity. Income statement: revenue, expenses, net income. Statement of changes in equity: beginning equity, contributions, distributions, comprehensive income. Statement of cash flows: operating, investing, financing activities. D. Identify the limitations of each financial statement. Balance sheet: historical cost doesn't show market value. Income statement doesn't capture non-cash expenses. Statement of changes in equity doesn't provide details of transactions. Statement of cash flows focuses on cash, not profitability. E. Identify how various financial transactions affect the elements of each of the financial statements and determine the proper classification of the transaction. This involves understanding how transactions like sales, loans, investments, and expenses impact each statement and where they should be classified, e.g., operating, financing, or investing. F. Demonstrate an understanding of the relationship among the financial statements. The income statement feeds into the statement of changes in equity and the statement of cash flows. The ending balance sheet is influenced by the statement of changes in equity and the statement of cash flows. G. Demonstrate an understanding of how a balance sheet, an income statement, a statement of changes in equity, and a statement of cash flows, in direct method, are prepared. Balance sheet lists assets, liabilities, and equity at a specific date. Income statement shows revenue, expenses, and calculates net income for a period. Statement of changes in equity records changes in equity during a period. Statement of cash flows, in direct method, starts with net income and adjusts for non-cash items and changes in working capital. Mastering these aspects will provide a comprehensive understanding of financial statements and their significance in financial reporting and decision-making.